What is up, trader, and welcome to this trade breakdown here on Euro USD, which resulted in a 4K profit. It is a 1-to-3 risk to reward trade taken with 15-minute confluences. As you can see, a 15-minute change of character together with an area of demand and some liquidation after a BOS. So with that said, stay tuned. I'm going to explain and break down the entire trade. Let's dive straight in. Alright, so in order to break this trade down, I need to start here on the 4-hour time frame, because the 4-hour is my medium time frame and it really helps me understand if I'm looking for either a long or for a short. So at the time of trading, the market was pushing in towards the downside and I was aiming to see the 4-hour grab liquidity underneath this liquidity low, and at the same time I was understanding that we were seeing a corrective pattern in towards the downside, which may result in towards an upward movement. Now, always when I get these descending channels, and a descending channel is just simply something called a 1, 2, 3, where you have a first low, a second low, and then a third low, you very often, or more often than not, see a reversal in towards the upside, especially if we look at the overall internal structure, because at time of trading, Euro USD was bullish here on the internal. So you can see this is one big impulse up. This was the correction, and there was obviously potential for another upside push. Now, focusing on the Fibonacci retracement tool, I use that always to identify the middle of the range. And the middle of the range is nothing more than the 50% mark, which indicates that price has made a 50% pullback after hitting a high. After hitting that high, we obviously see the pullback in towards the downside. However, at the beginning stage, it is moving down impulsively. And after that, we see that correction, right? So we see that 1, 2, and then a third low exists, and exactly that is the pattern that I often look for when trading potential reversals, especially also keeping in mind that we came in towards that area of liquidity. We are below the 50% mark and we have that 1, 2, 3 pattern. So at that stage, I'm already ready to look for a potential long. But obviously, we don't just go long. We then also need to understand that we are looking for those lower time frame confluences, and those come on the 15-minute time frame. Now, there are two ways that I understand that the market is ready to make a pullback. Number one is that we see a change in the overall structure. So for example, over here, we see that push down and then boom, boom, we see a change in the overall market structure. And number two is when we reach a higher time frame area of demand or a higher time frame area of liquidity. Now, we understand that on the 4-hour time frame, we grab liquidity underneath that low. So now on the 15-minute time frame, what I'm looking for is a shift in the overall market structure. So in this particular instance, what I'm specifically looking for is something called a change of character. So this over here is my change of character low, and at that time, this was my change of character high. So I was already actively looking for that potential long, because at this stage, I understood that we grabbed the liquidity. And if we just move all the way back into the left, what you'll see is that this is the overall swing low. And we can see, we have now grabbed the liquidity underneath that swing low. So what we then also see is straight away a fake out, indicating to me that there were indeed stops, there was indeed liquidity underneath that liquidity low, and this might as well be a point from where the market could start reversing. Then quickly going in towards the 5-minute time frame even, what you'll very obviously see is again the pattern that I was talking about, guys. Remember the 1, 2, 3. So over here, what you see, low number 1, low number 2, and then low number 3. So going back in towards the 15, because the 15-minute is my entry time frame, I was looking and I understood, okay, this again was the fractal low. The high of that bullish candle is my fractal high. If we're then able to break that fractal high, what you're ultimately just seeing is a shift in the overall structure. So this was what I was looking for. And then what we see is boom. Okay, we see that change of character. So we understand that there's bullish momentum. We identify that this is the sub for the buy. This is my area of demand. And that demand zone is created by liquidating the lows over here on the higher time frame, but also on the 15. So that indicates to me that this is a strong area of demand. And I'm then happy to set my limit on top of that area of demand with my stop loss right underneath that demand zone for around a 7 pip stop loss. So in my strategy, it is mechanical to target a 1-to-3 risk to reward. So we put the stop loss at 7 pips and the TP at 21 pips. We put the limit order right on top of that area of demand. And as you'll see, we get tagged in. This is just around pre-New York session, and straight away price pops out again. Then what you can understand is that this sell is now your new area of demand. And if you were to take a second entry, just simply place another position on top of there. I personally didn't do that, but that is just overall order flow. So we should now respect the low over here. So you could, let's say, place your stop loss there if you would want to. In my strategy, I just leave the stop loss here and I just wait for it to hit TP. So then the market pushes back in towards that demand zone. Straight away, another bullish reaction. You see the market was slowing down a bit and then it just popped up into our TP for a 3% trade. So a 3R trade here, very beautifully in and out. Overall trade time was around 1.5 hours. I remember, guys, when trading pullbacks, always try and aim to target the 50% mark. So what you then also see happening is that the market pushes in towards that 50% mark and then straight away rejects inside of it, together with rejecting that area of supply. So this was a quick trade breakdown, guys. Hope you enjoyed. Make sure to leave a like, and if you have any questions, make sure to ask them either here down below in the comment section or join our Discord. It's all free, link in the description down below. Thanks for joining and see you in the next one.